Britain is on the mend, according to Chancellor George Osborne's interpretation of the latest UK economic growth figures for the second quarter of this year. GDP from April to June is up 0.3% on Q1 growth for this year of 0.3%. Swinging public sector cuts means any further growth has to come from the private sector. SMEs, small to medium firms, account for 99.9% of the sector, yet many are struggling to get the finance to grow their operations. The government's Funding for Lending scheme was launched to help.
Well, under Funding for Lending, banks are offered cheap loans by the Bank of England, and the rate attached to those loans is cheaper than those banks can actually get in the markets, and that means their funding costs are reduced. And because their funding costs are reduced, those savings should then be put on to the real economy. So it brings down the cost of credit for consumers and small businesses. And so the amount in loans that banks can actually access is tied to the value of their stock lending to the real economy. So as they lend more to the real economy, they can actually get more in cheaper loans from the Bank of England.
Figures for March to May this year show a £4.5 million net drop in business lending, something which the Federation of Small Businesses, which represents 200,000 British firms, says is a disappointing trend. It's calling for a prompt review into FLS. But why is funding down?
Businesses have been told, or they have deduced, that they will be turned down when asking for credit, and therefore they just don't bother because it's a costly and time-consuming procedure to actually put together a case for credit. Now, if you actually look at the figures, it's a fairly even mixture of both of those things, but also there is an additional pressure because essentially finance is there to support growth. And if there just isn't the growth potential out there, just recently we heard that the UK economy might end up growing by around 0.9% this year. That's just not enough growth to justify a surge in the demand for external finance among small businesses.
In his March budget, the Chancellor extended the FLS scheme by another year to 2015. And it's much harder for some industries than others.
A lot of the service sector firms, especially the new ones coming through who might be tech-based, as we've seen in Tech City, they don't have assets necessarily to offer up as collateral, so they can't access funding from the banks anyway because they can't offer up something for the banks to secure themselves in that lending. So, I mean, there's another tension for bank lending where SMEs might not necessarily be able to get finance from those banks.
So we're looking at alternative sources of funding. There needs to be kind of a bit more education for businesses to kind of find new ways of funding their business, isn't there? Yeah,
undoubtedly there's a job to do for the alternative finance providers to get out there and say to businesses, look, we can offer this alternative, it's quicker, it's cheaper, it's easier, there's less risk. And so they have to tell the businesses that they are there to raise awareness, and so businesses who perhaps might want finance but can't get it from the banks can look at those alternatives and get what they need to invest and grow and create jobs and so on.
So what other choices do SMEs have?
Now, if you happen to have a fast-growing business, then you can go to venture capitalists and you can look at what funds and business angels can offer you. But obviously the bar is set quite high. And it's not quite as easy to get funding as perhaps people might give you the impression it is. Then there's a whole range of new peer-to-peer and crowd funding providers, and their potential remains to be explored. They're growing very, very fast, but they're still far from mainstream. The advantage they tend to have is that they tend to be much more, I guess, user and customer friendly. They make their decisions a lot faster. Sometimes through crowd due diligence, they can give you better deals from individual investors than you would get from the bank. Individual investors don't have to put up with things like capital requirements and things like that make it quite hard for banks to lend sometimes. So these can offer alternatives. Again, it's a matter of choosing finance that's suitable for you. Where you actually get it from is perhaps a secondary consideration. The important thing is that you get the right product.
Tatty Divine is a thriving jewellery business based in East London. When the managing directors decided on global expansion, they went down the crowd lending route with Funding Circle and got £100,000.
The government had just pledged 20 million to Funding Circle as a way to actually get finance to the SMEs, and it just seemed a much quicker route than any other, really. And the idea of, I love the idea of crowdfunding, and equally I love the idea of crowd lending. It's ever since a child I've always thought if everyone put a penny in a pot, you'd have millions. So it's that kind of concept, really, isn't it? And it's an incredible opportunity for investors. It's a bit of a no-brainer.
And some peer-to-peer funding websites like Rebuilding Society have lent anything from £5,000 up to £50,000 in one go, and they say they listen to all manner of businesses.
Our criteria is that a business must be a limited company or a limited liability partnership. It has to have been trading for 2 years. We don't typically feel that a loan is suitable for companies younger than that. Knowing where your money is going to come from to repay the loan could be problematic. And we need businesses to be profitable as well. As a platform, our responsibility is towards our lenders as well. When a business applies to us, we check them out. We make sure that they're legitimate and that enable the lenders to get a return on their money.
No prejudice against any industry?
No prejudice against any industry. That's the beauty of our website. We've recently funded a pub in Weston-super-Mare, and the pub industry is one that a lot of banks have said no to. But at the end of the day, if lenders can see that a business is a good business, it doesn't really matter what industry they're in.
It all sounds very positive, but are there any pitfalls?
The fact of the matter is that we have to be careful not to give the message that all sorts of financing instruments are somehow equivalent, and if you can't get one, then maybe you can get the other, and that's good enough. In fact, it's very important to know precisely what the needs of the business are and to take advice on that matter in order to make sure you actually have very good chances of being granted the finance you want, but also that you don't make a decision that's going to be hazardous to the business.
For Tatty Divine, the process with Funding Circle worked for them.
Everything was done over the internet. The application forms were very, very simple to fill in. In fact, they were done so online. We submitted management reports, previous accounts, some very short business plan. It wasn't even a business plan. It's what I wanted to do with the money, why we needed the money, and why people should lend to us. And it was 750 characters or something. It's incredibly simple.
Beyond peer-to-peer lending, what else is out there? Business is booming for so-called challenger banks like Shawbrook.
75% of our lending is to small business, 25% to retail customers. And that business comes to us from, 3 different arenas. We do have a field force out on the street, primarily in asset finance, but the majority of our business comes from very carefully selected professional intermediaries across the high streets of the UK. And absolutely, a lot of customers who are coming our way because the big banks have either said, we're full, we don't want any more lending at this point in time as we reduce our balance sheets, or just the service proposition for the big banks is too slow, too bureaucratic, and that's what Shawbrook is able to react to. I think having 85% of the banking market tied up in 5 institutions probably isn't that healthy from a competition perspective. In some respects, it's a merry-go-round between the big 5, and there's no doubt that market research points to the fact that a lot of consumers, whether they be small businesses, big businesses, or retail clients, think one bank is the same as the other, and that's a natural consequence of that big 5 domination. And I think that in turn is what's created the challenger opportunity, because people are looking for choice, people are looking for a different approach, people are looking for businesses and banks that are fleeter of foot, will make decisions, but will actually start to make decisions not just from a computer says yes, computer says no perspective, but with, banking the way it used to be, with a significant human interface.
So will the emergence of more of these kind of banks soar?
We can only hope there will be more competition in small business banking. It's a heavily concentrated market. About 85% of all of this business is done by the the top 5 banks. So you can always argue that there's potential to inject more competition there. But of course, what we really would like to see, and this is something the British Business Bank is supposed to pursue in the following years, is a whole new set of markets opening up. What remains to be seen is whether challenger banks can make a robust economic case to themselves, first and foremost, themselves and their shareholders, that it is economically viable to develop a business model where you allocate substantial time through empowered bank managers to deal with businesses on a one-on-one basis and give them enough time so that you understand their business and understand their needs, and where the bank manager has enough discretion and enough knowledge to actually help them navigate the range of options for financing that's available to them. Now, if they can demonstrate that that can be done in a way that makes money, then others are sure to follow, and even the very established banks can start to reconsider the way they do business. But it still has to pass the test of commercial practice, and so far we haven't seen a huge difference. But time will tell.
Not forgetting that business associations don't seem to be happy with the government and the Bank of England's outcomes for funding for lending. Mark Carney's just landed as the new governor of the Bank of England. Do you think he'll be reviewing the FLS anytime soon?
Well, he praised the FLS when he had a meeting with MPs recently. He said that he thought it was a good scheme, but we'll still have to wait and see how it performs and so on. But he himself has said the Bank of England and policymakers need to do unconventional things in the current economic climate because the economy is just not following the path of any textbook. So he's already expressed that he's into the unconventional, and FLS is certainly unconventional. So we'll have to wait and see how the extension that Osborne announced plays out. So maybe he will have a look and decide to extend it further, or maybe just bring in a whole new radical policy, who knows.